guys. Pretty interesting. My stream seems to be a little. Let me make sure. For some reason, it doesn't show that I am streaming. So if I am, my apologies. I'm just making sure the software is running properly. There we go. Okay. I think I should be on now. I hope everybody's having a good day. Give me one quick second to just verify that everything is good. Hey guys, let me know if you guys can see me. I was having some issues with my live streaming platform, but it seems to be working now. All right, so like always, my name's Najarro. Welcome to these streams where I pretty much just take a look at stocks you guys want to take a look at. Hopefully we can, give me one sec. Let me just set everything up. There was a bit of a technical, but let's see, guys. Like always, feel free to post on the comments what stocks you guys want to take a look at. Let's take a look at charts right now. So I did end up making my purchases for the week. I did post them on my Discord channel if you guys want to check it out. Let's see, what else do we have. So right now the stock market been a pretty crazy. Pretty much I'm green in most stuff. Some stuff are red. Big down day on Celsius today, and obviously hello Alex. So I mean, big down day for Celsius today. The stock is down about 14%. I believe they did announce a recent offering. So that's the main reason for the stock price being down. I did mention a bit in a few episodes that it was looking a bit overextended, and obviously this is still one of my biggest positions due to gains. So Celsius is still pretty nice. Redfin is down 3% today. Fastly is also down 3.3%. Tattoo Chef is down about 2% for the day. Skills is down 1.6%. So we definitely have some stocks taking a bit of beating, but we have some red days, right? CrowdStrike, one stock I'm really enjoying right now, is up 3.5%. What else do we have? We have Space up 3%. We have Meli, Mercado Libre. This is one I feel is, I might add it on my list for next week if it stays around this price. I do believe Meli is looking pretty attractive right now. What else do we have? We have Roku at up 2%. So we do have some nice green stocks today. Unity has finally broken over $100 again, and it is up above its short-term moving average. So that is looking pretty good for Unity right now. I'm super excited. So let's take a quick look at the overall market right now. So Dow is up 0.6%, Nasdaq is up 0.8%, the S&P 500 is up 0.6%. Let's take a quick look at maps. I don't know if, and like I said, guys, if you guys want me to take a look at any stocks, feel free to post. What else do we have here? So we have Now. Now is up 4.03%. I actually just did a video on this 2 days ago, or maybe, I don't know if it was yesterday or 2 days ago, about Now. And it's pretty interesting. I mean, you can tell analysts, obviously joking, watch my videos and just recently gave it a price target. So that's up 4%. What else do we have? We have AMET. So we have pretty much green all over the field. So I'm hoping everybody here is having a good day. The only, I mean, I don't see much red. Maybe some financial data stocks exchange are seeing red, and right here in this consumer cyclical are seeing a bit red right now. But nothing's really screaming anything. Micron Technology, I know that took a hit. What's going on, Shane? How's it going, Shane Smith? Hope you're doing good. Feel free to let me know if there's any stocks you guys want me to take a look at. Tesla is up 2%. It's back over the 600. So we can see overall market is looking okay. Let me take a quick look also at what what's trending right now. Anything trending outside of the typical, what I would say, meme stocks right now, right? We have Clover down 3%, but this one's had such a run up. What else do we have? We have MVIS up 14%. What's going on, Dr. Sim? Morning. And Shane, happy you're doing great. Yeah, it's pretty good day for most stocks today. Mets, it's in Square undervalued. Halo. So Square is one Halo that I was contemplating. If you, I did a video on Sunday or Saturday on some of 4 stocks that I was looking to buy this week. Square made the list, but I didn't end up purchasing it. At the end of the day, I still am bullish on Square. And if I wasn't a little bit more bullish on the other 3 stocks I just purchased, Square would have made the list. Shane, you sold your meme stock UWMC today. Hope you made some money. Congratulations if you did, Shane. Any thoughts on what you're gonna use the remaining funds for? Are you gonna play another stock, or are you gonna do more investing with it? But yeah, I mean, it's crazy, right? Obviously, any special news on Skills? I don't think so. Let's take a quick look at Skills stock. At news, I think right now the overall just Skills was one that had heavily shorted, so it kind of moved up a lot with these other meme stocks, right? And I think right now it's just cooling down, right? In the past 5 days, the stock has gone up a nice amount. In the past month, it's up already 52%, right, from its low. So I think right now the overall correction is just that. It's just a correction from the increased movements it's seen. So Shane, you went into SPP stock. Not familiar with this one. So it seems like this is, wow, a super small company, right? Market cap of $162 million. So best of luck. This is definitely one of the smallest companies I've seen in this channel for some time, Shane. So Shane, may I ask, how long have you been investing? And just curious. So let's see, what else do we have here? So like I said, I'm super happy. Unity is up 1.8. Hey, Square is actually up 2.2% for the day. So you can see the green ones are the ones I was thinking about buying today. It was CrowdStrike, it was Square, it was Twilio, and it was Shopify. So all those are I think all 4 of those are looking pretty nice for me right now. What else do we have here? So I did see news about Microsoft kind of releasing a new, I was just reading it. Microsoft, it's not a huge mover for the stock, but I thought it was pretty cool. They are kind of releasing their 3 years. I started when I noticed my 401k was negative during all-time highs. Oh, Shane, that's pretty insane. What was it? The funds you were within your 401k? I may ask, how old are you, Shane? Again, just curious. You don't have to answer. But that's pretty interesting to see. I'm guessing you were probably in more safer funds during those all-time highs. UiPath, Halo Who? So UiPath, currently, I don't know if it would look undervalued at the moment, Halo. It depends on what you're looking at. In forms of where it's at right now, I don't think it's undervalued. I think in looking at the future potential, that's where the undervalued comes in. But Halo, right? I mean, UiPath is trading at what, like a 35 forward price to sales ratio, Halo. So in current fundamentals, right? In current valuation, it looks a bit scary, super scary for sure. But this is probably one of the first few companies that I've seen within this market. So the growth it can see is definitely something that can make it future undervalued, if that makes sense. Do you think, Dr. Sim, do I think the outage will affect the Fastly share price? So I don't think so. I know a lot of people, obviously I did a video on Fastly. I mean, it went up a nice amount yesterday, even after the outage. I did a video on it, Dr. Sim. Outages happen, right? I mean, we've seen some, even if its competitor, Net, right now, Cloudflare, Net, they had an outage last year. Outages are happening. I mean, no business is perfect. And as long as it doesn't happen frequently, I mean once every other year or so, I don't think it's bad news, especially since they were able to handle the situation properly, and also because they were pretty transparent with the way they dealt with it. I thought that was good news. I thought that was good. I felt like if they were a little more secretive behind it, that might have thrown some red flags. But mistakes happen in business. I mean, a few hours. I'm guessing they could take some form of financial burden. I don't know. I don't know if what kind of financial burden that might come with Dr. Sim. But I'm pretty sure within contracts they have. Hey, there is a possibility that outages might happen, that we need to do rework on our servers or stuff like that that can cause some form of slowdown. So I'm pretty sure they have. This is not a unforeseen thing. It's not something that they did not expect to happen. So I'm pretty sure maybe in the contracts or something they have something within outages. I don't foresee companies moving out of it. I mean, I like I mentioned, Cloudflare Net kind of had an outage last year. But I mean, I guess there are some negative things. I don't really think it can really move the stock price though. I don't think it was something that drastic. Shane. So Shane, it was weighted all in my company for my 401k. I found an option to take half of the 401k and manage it myself. I went all in what I had on AMD at the time. Now, Shane's nice, Shane. So 3 years ago, if you went in all AMD at that time, that is pretty impressive. Those are some great gains for sure. I know AMD has probably been like a 300 bagger since then, 5 years. So you let's say assume 2018, even more, 500 positive. On a positive note, think if they were able to take precautionary measures, should be a good thing. Yeah, so I do think there were a few positives and a few negatives to the outage. The positive is you were able to see how the team was able to work under that pressure. So their engineers worked pretty well. You were also able to see how transparent they were with the stuff, and how quickly they were to fix issues. So there were some positive things. Also, obviously, there were some negative things as well. So Shane, it was all weighted on your company for your 401k. That's lame. So they didn't have other funds. I know sometimes some 401ks you're able to go within your company's stock. You're also able to go with just a traditional fund, which is more like an S&P 500 fund, and then you can also take some money and kind of use it on your own within your own self, right? So that's actually pretty cool. So does anybody have any stocks they want to take a look at for an AMD? I mean, AMD is probably one of my favorite semiconductors right now in forms of undervalued. And Nvidia is my favorite stock right now, but I do think AMD is one that is just ready to blast off. Good morning, Kai. Check out SoFi for sure. I mean, SoFi is one I've covered a few times, Kai. In terms of recent, I think right now. But let me just take a quick listen to Dr. Sim. So, Dr. Sim, you are confident of Lisa of AMD. Buy Intel, new team may give some tough time in AMD. So, I do agree, right? I mean, I do believe Intel is not one that's going to just roll over, right? Intel has so much cash flow from operations. They have so much cash at hands that they can put to work to really go against AMD. But AMD, I do believe with their acquisition of Silenex, they are, and just the products that they're continuing to release. I am a bull of AMD. I'm not saying I'm a bear of Intel. I just believe Intel has some time before they're able to kind of like be a nice big player again, even though they already are, but just kind of see that strong growth again. So AMD is definitely one I'm very excited about. So Jay, tell us, we can definitely take a look at DraftKings, and Jose, we can definitely take a lock at BHVN. And guys, if you're here, make sure to hit the thumbs up. It really does help with the overall channel. Kai, I have taken a look at SoFi. I'm pretty sure I've done some videos on it in the past 2 weeks. So if anything, always feel free to go to YouTube and just put my name, Jose Najarro, and then the stock ticker. I'm pretty sure you would find a stock, especially usually in the fintech, in the technology market, semiconductors. You'll definitely find recent videos. We can know right now SoFi has definitely seen a crazy movement, right? From its in the past month, it's up already about 35-36%. So we'll take a look at recent news for SoFi for sure. Um, but RJ, you think we could get AMD for 75 again or breaking 80 resistance? So RJ, yes to both. I mean, short-term volatility, RJ, is something that happens in the market. I'm not a technical guy. I'm more of a long-term investor. So I believe both scenarios can happen, and it could break the 80 resistance and then pull back down to the 75. So for me, I haven't purchased this company AMD in some time, just because it is already a big position in my portfolio. I think even with me adding over time, I'm still up over, I think, 200% on AMD. But AMD is one I'm super excited about. And if I wanted to add, I would add positions right now over time. I do believe dollar cost average is one of my favorite methods of investing. So AMD in the short term can definitely see those types of movements. Long term things, I do think AMD is ready to really take a nice blast off pretty soon. So Lisa, good morning. Love the time change. Me too. I do believe this 10 o'clock is kind of hitting it, getting a little more traction. So appreciate it when you guys come and support the channel. It really does mean a lot. And here, just try to give back to the community. Any thoughts on LGIQ? So LGIQ is one I did talk about a nice amount. I want to say earlier on this year. It's an over-the-counter, super small market cap, right? $62 million. This was a super small play in my portfolio. This is one I consider a tier 3 stock, which is more of a speculative play. I kind of wanted to get that exposure in Southeast Asia a little bit more. Unfortunately, the stock has taken a beating. Because of that, I mean, the whole market has taken a beating. When the whole market takes a beating, Lisa, I kind of focus mainly on my higher conviction stocks. So I haven't really hit my tier 3 stocks just yet. So at the moment, I really haven't taken a look at it. And that's the great reason of it being such a small position, that it doesn't really affect me too much in the long term of things. It allows me to focus mainly on my bigger stocks. But maybe in the future, I might take a look at it again. Lisa, at the moment, I haven't sold my position. It's definitely a big loser right now, but percentage wise, but monetarily wise, it hasn't really affected my portfolio. And that's why I love tier 3 stocks, right? If they go down, they only affect so much, but if they become multi 10 baggers, they can really affect your portfolio. A perfect example was Celsius. Celsius was a tier 3 stock for me. If it would have gone down, it was a bad play, but it's been overall, it's been a 500% since I bought. So it's definitely been, it's one of those reasons of why I enjoy even small positions in stocks. Sometimes you win some, sometimes you lose some. This is one I'm losing in right now. So let's take a quick look at SoFi for Kai. So SoFi, let's take a quick look at their investors presentations, investors relation. Not too much. I don't want to say there's not much news right now on SoFi. So let's see, June 8th, Galileo names Derek White as new CEO. So this is the company they just recently acquired. I believe it was last quarter. June 6th, they announced, and this is one thing, SoFi, I feel, continues to drop new products. And that's one thing they do mention in the investors presentation. On June 6th, as student loans debate continues to draw uncertainty, SoFi launches new program to help borrowers. So on May 28th was when they finally became known as SoFi ticker, when the merger was finally announced. I mean, SoFi, in short term of things, I don't think I can give you much answer. Kai, let's take a quick look at the overall price performance. I do want to say, in technicals, I don't follow technicals, but I do believe there is a higher risk of a pull down. You can see it's a bit overextended. It doesn't mean it's going to happen. I just believe there's higher risk that a pull down could happen for SoFi. In the long term of things, I don't have a position in SoFi, but I do see them being as a... And Lisa, that's the great thing, right? Small positions are ones that if they if they're in your portfolio, they might look a little ugly in form of percentage wise, but monetarily wise, they don't really affect much. But if they become a multi-bagger, though, that you're going to be happy that you have a small position in these multi-baggers. But at the same time, when things go bad, like we've seen the overall growth market, I really focused on some of my bigger players right now. So it's good to, that's why I have a tier system, right? I have a tier 1, tier 2, tier 3. When things go bad, or when a tier 1 stock really takes a hit, those are the ones I focus the most in, because those are the biggest players. Tier 2, then I go down to my tier 2, then I go down to my tier 3 system. So let's take a quick look at, I know they have investors presentations. Let's take a look at the overall presentation. So I think we looked at this yesterday, Kai, but I don't mind taking a look at some stocks again. So first, the overall members that they're seeing increase, right? Every quarter, SoFi is seeing improvements in their members. So this is definitely a growth stock. If we take a look at their products, they're always having new products, new financial service products increase. Look, triple-digit growth on their products compared to the same time last year. They recently purchased Galileo, right? And Galileo is also seeing, what, 130% year-over-year growth. This is a market, right? A company that's not stopping anytime soon. What I'm really happy, I'm super, they also give some strong guidance, right? The guidance that they give are good, but they always tend to beat those guidance, right? Look at it. Q1, they guided for high $195 million in revenue and about 195 million, yes, and about 1 million in adjusted EBITDA. They beat those numbers by some insane levels. They had higher adjusted net revenue. They had a higher adjusted EBITDA. So this is definitely a growth company. The other thing I am enjoying is now it would be 3 quarters of them being adjusted EBITDA profitable. And now if you take a look at trailing 12 months, they are adjusted profitable as well. So exit. This is stock SoFi. Real quick, Kai wanted to take a quick look at it. Then for guidance, look for 2021. They expect 58% year-over-year growth. They expect their this would be the first full year of them being adjusted EBITDA profitable. So I do think for the long term, SoFi is a nice play. The only thing I want to say, the main concern I have right now with SoFi, and it's just the overextension from its moving averages. This doesn't deter me from buying a stock, and for those that have just entered, I don't have a position in SoFi. Technicals, like I say, I'm more of a fundamentals guy. I look at future of the company, I look at future growth in the market, but technicals help me out when I want to buy. If they are a bit overextended, like it is right now, and I wanted to open a position, it would just be a small position. And because I'm here in the United States, I have free trading, I have fractional trading. It allows me to open a small position over time. And then maybe if it becomes a little bit more corrected, if I want to keep adding positions, my position sizes would increase when I would buy. I would buy maybe a medium-sized position next time, and so on and so forth. So I want to say this is probably the major red flag for SoFi from what I see right now. So next, Jay and Kai, I hope that was helpful. Kai, next you want to take a look at DraftKings. Let's take a quick look in Simply Wall Street. DraftKings is one I'm really excited about as well. This one is actually in my portfolio. I don't remember when was the last time I've added in DraftKings, and if you guys ever want to know when I buy or sell a stock, it's free. It's free, right? You can join my Discord channel. I should also always have it pinned. But if you go to any of my videos, go to the description, you'll see the Discord channel. There I post some of my biggest resources, some of my biggest, every time I buy and sell. Again, none of this is advice. I just try to be as transparent with my community as possible. And if you guys have any questions, feel free to ask. Obviously, if I could answer them, I will always answer them. Kai, so you're waiting for a pullback to start a position. Kai, so one thing, again, not normally something, not a recommendation, but one thing I do is sometimes I feel like if I see a stock continue to go up, I regret missing out on that gain. I get that like FOMO. So one thing I do is because here in the United States we have free trading, right? So even if I buy a small position, it's not going to affect me. So sometimes I might even just have a small position just to get some skin in the game. And then if I see a pullback, that's when I really go ham on buying. So sometimes even having a small skin in the game can help a lot with future emotions. Kai, no problem. I'm sorry I missed yesterday's episode. I'm in the military. Stationed overseas. I work weird hours. Thanks, brother. Appreciate you. And thanks for your service, Kai. And I'm happy to help as much as I can. Don't ever apologize. The support alone, just you posting on the comments is more than I can ask for. Maybe even a thumbs up. A thumbs up can also help out. Double A, love this stream. Appreciate the support, Double A. I took a look at your stock yesterday, and I'm happy you were able to see the video yesterday. And like always, feel free to post on all my videos. I tend to look at stocks there. So DraftKings right now. DraftKings market cap of $21.9 billion. Actually, let's start off with technicals. So DraftKings right now, I am liking it. It's not overextended, right? It's definitely pulled back a nice amount from its all-time highs. But I feel like this is what overextension happens, right? Overextension works both ways. It's not 100% guaranteed. I just think the chance of it happening is a bit higher. So when stocks are overextended, eventually they tend, not a guarantee, they tend to pull back down. But the same thing can happen when stocks kind of pull too down, overextended, right? Overextended on the underside. They tend to eventually pull back up. Not a guarantee, definitely not a guaranteed. I just believe the percentage of it happening, or the probability of it happening, is a little bit higher. So right now it's sitting nice. It's sitting next to its moving average. It's not overextended at all. So if I wanted to enter to DraftKings, now would be a position where I would add like maybe a medium-sized position, small to medium-sized position. If we take a look at the fundamentals of DraftKings, $21.9 billion. Future growth, this company is expected to grow 28.6% on average for the next 3 to 5 years. So this is a nice hyper growth stock, right, Jay? Right now, the company is not profitable and they're not positive in cash flow from operations. So this is something that it's not bad. Obviously, it's not something that would turn me away. This is just, again, just like how I add overextension to my risk in the back of my mind as risk. When a company is not profitable or not positive in cash flow from operations, this is again an added risk. So it tells me, okay, if it's overextended, if it's not profitable, it's not positive in cash flow from operations, maybe I should limit myself on a position, because there is the added risk of this company maybe having some more volatile days. That's where DraftKings would fall. At the end of the day, then what it really takes is understanding the business is in. I enjoy DraftKings, so for me, it's more like a tier 2 stock than a tier 3 stock. But at the same time, I don't think it would be a high tier 2 stock. If we take a look at the balance sheet, this company has $2.8 billion in cash, right, Jay Teles, and it has $1.2 billion in debt. So even though it's not positive in earnings, it's not profitable in cash flow, they have a huge amount of cash available to them. So this makes sure that, hey, this is a company that in theory should be able to survive many, many years. Like, let's take, in the past year, it burned about $400 million. So with the amount of cash it has, it'll be able to survive about 3-4 years right now. So it tells me that DraftKings fundamentally is in an okay place. The overall market, I mean, we're seeing bettings being approved in states overall. I do believe future bettings, the gamification, and everything else that's happening right now, this is a market I can see grow. So I'm happy it's in my portfolio. Right now, I wouldn't mind increasing my exposure if I wanted to, definitely. So I wouldn't be mad if somehow someone just bought DraftKings in my portfolio right now. So that's where I would say. At the moment, I'm not buying, though. So, Jose, we'll take a look at BHVN in a bit, but first let me answer this question from AA. What do you think of AMD compared to Nvidia? So, let me just say, so yes, and Exit is right. I do believe DraftKings is a good opening, though, with sports getting back again. And they were actually, I want to say, I like the innovation that DraftKings did even before sports were opening up. So they were really focusing on kind of like gamification stuff. They were focusing on kind of esports a lot during this whole kind of when sports were kind of off. So it shows that they have a team that is able to think outside the box and see where the next move is at. So I really like that during the COVID times, how they were kind of innovating and thinking of ways to continue to make money. But I do believe, just like Exit is saying, with sports now getting back again, it definitely seems like a good play for opening. But I do believe it's a good play for both types, because their team is very good at innovating. So AA, my thing of AMD and Nvidia. So first, I used to be a huge AMD bull, a huge AMD. I've been in AMD. I've been talking about AMD. You can even go ask my friends, since this stock was below double digits when it was around $7. So I've been a huge AMD bull for such a long time. Nvidia though is my number one semiconductor company now. The growth that Nvidia can see, I mean, the artificial intelligence, machine learning, their strength in the GPUs right now market is insane. So I for the future, I can see Nvidia being a way bigger company than AMD. Right now, in price points, I do believe AMD it has a higher chance of returning better returns to investors in the next 12 months than Nvidia. I think AMD right now is being slept on. I think too much excitement is going to Nvidia. At the same time, I do believe Nvidia will be a bigger player in the future, but I think in the next 12 months, AMD might be one to, in forms of performance, in stock performance, I believe, and again, not advice, that AMD will be a better performer. At the same time, both of them are big positions in my portfolio. Nvidia right now with its gains is about 9% of my portfolio size. AMD is about 6-7%. So I'm happy with both positions in those stocks. So double A, I hope that helped out on my thoughts on AMD and Nvidia. And let's see what else. We wanted to take a look at Jose, I hope you're still here, guys, and if you guys are enjoying the stream, make sure to hit the thumbs up, guys, and feel free to post on the comments. I take a look at stocks you guys want me to take a look at. Obviously, I just take a quick look at fundamentals and technicals. At the same time, I can't do a full analysis of looking at the overall market. But here we're taking a look at Biohaven Pharmaceutical Holdings Company. This is one, Jose, this is one of the markets I don't really talk about too much, and that's because I don't understand. I don't understand it, right? By education, I have a master's degree in electrical engineering. So semiconductors, technology companies, those are like my bread and butter. Like a semiconductor, those, and through work experience, those are the companies I can really understand. And then easy ones to understand in my experience, for example, like Spotify, Facebook, those are companies that you don't really need much to understand to really see how their growth is going to happen. In form of technology wise, right? Then I feel like the heavier you get into technology wise, it helps out. It's not needed, but it helps out if you have some form of information behind it. So I don't have much knowledge in the pharmaceutical world, but let's take a quick look at the fundamentals. First, this is let's start off with technical. So this is, what was it? Biohaven. First thing I'm gonna see right now is this company is very overextended for sure. I don't know if this is, I mean it's gone up a nice amount in just the past few weeks. It over 50% probably. So the first thing I'm seeing is this is overextended, and this is the thing about overextension. It was overextended here, it was overextended here, it's overextended here. This company can keep being overextended. Eventually what happens is, yes, it does see a pullback, but sometimes it's not as pullback as it was at some of its overextension. So that's why overextensions doesn't really deter if I buy or sell, just more how much I buy. So I believe right now, if I wanted to open a position in this company, there's just higher risk, right? It's just understanding that risk. I believe there's a higher risk of a pull down happening. So if I was to ever buy here, it would be a small position. So first thing I'm looking at it. So this is something I would put like as a red flag. Now, if we take a look at the fundamentals, $6.4 billion, small company. If we take a look at future growth, this company is expected to grow its revenues 47.9% on average for the next 3 to 5 years. Huge growth company, but we can see right now it's because it's a super small revenue grower. In the trailing 12 months, it's only made $106 million. So this is I want to say a very nice, a startup growth company, right? This is more what I would consider a speculative play to some extent. Because it's not profitable, it's not positive in earnings. This is probably a market that will eventually go up, will eventually see better returns in the future. Right now, we are in early stages, and that's why it's not profitable and not positive in cash flow from operations. Again, this is not a bad thing. It's just a higher added risk, and that's the great thing about investing. We have to understand where the risk comes from. just because it's higher risk doesn't mean it's a bad investment. It just means you have to understand that there is a higher chance of you losing money, or a higher chance of you making better return, or better, you have a higher or you have higher chance of making probability, right? And each investor has their own type of risk tolerance. Maybe what my risk tolerance works at might be too high for you, or it might be too low for you. But I do believe a great thing to understand is that risk tolerance within investments. So it's a high future grower, but a high speculative play. What I would want a company like this to have is a very, very strong balance sheet. So they have about $566 million in cash and about $437 million in debt. And this was last updated March 30th. Normally, I would say, Jose, normally if this was a tier 3 stock in my portfolio, I wouldn't like this. I feel like they have too much debt compared to cash for a company that's not expected to be profitable anytime soon. For a company like this to survive, I feel like they're gonna have to do a lot of offerings. They're gonna have to dilute a nice amount of shares. So this is a stock that if someone was to buy it in my portfolio right now, I personally would sell out. I would sell out of it. Again, that's just my investment style. It might be different from yours, but this balance sheet right now is one I'm not happy to see for a company that's not profitable and not positive in cash flow from operation. So that's that. And Judo and Double A, thanks. Keep up the great work. Appreciate the support. It really does mean a lot. So let's take a quick look at Enjudo's eBay, and then exit. We can take a look at ENPH. Guys, like always, feel free to post on the comments what stocks you guys want me to take a look at, and I'll do them for free. Right? Again, not advice, but I just enjoy looking at fundamentals of company. Quick thing, let me just see the overall market. So Celsius right now is down 14.6%. This is probably going to be my video for the day. Space is up 6%. Kai, you want to take a look at HIMS. HIMS is one I enjoy fundamentally. Not a company I have in the products, but we can definitely take a look at it. C is up 2%. I just want to take a look at some of my big players. So C is up about 2.7%. What do we have? What else do we have here? My big players are Unity. Man, I spoke too early. Unity is back below 100. But it's still, I'm happy. I hope it stays above the moving average. Sorens, and then we have Nvidia. Nvidia, right? I do believe the biggest hit of Nvidia right now is just overextension, right? Look at it; it's pulled up so much compared to AMD, where it's nowhere near overextended. So I think in the next few months, I know someone asked it. I do believe AMD might provide better returns in forms of stock performance. So which one? What were we talking again? So it was eBay. All right. So eBay. So eBay right now, first thing I'm seeing in form of technicals, again, not a bad thing, just something to keep in mind of. It is a bit overextended from its moving averages, and you kind of see this. Look, overextension, pulls back, overextension, pulls back, overextension, pulls back. Sometimes, but remember, the overextension, when it pulls back, sometimes it's not as bad as where it was before, right? So again, just something to keep an eye out. I think right now is a bit overextended, the higher chance of it seeing a pullback. If we take a look at the overall stock, let's take a quick look. And actually, I haven't been looking at some charts. Let's take a look at eBay in forms of, I believe eBay is profitable. So maybe EV to EBITDA, and maybe, let's see, PE ratios forward should probably be the same. Should have looked the same. So yeah, let's take a look at eBay right now in forms of forward ratio, or PE forward ratio. The first thing I'm seeing is this stock right now is a bit overvalued compared to where it's been before. Right? I don't know who asked about eBay. I like talking names. Enjudo. So Enjudo, first thing I'm seeing right is we saw it a bit overextended. I'm also seeing its forward PE ratio being a bit overextended. Where it's at right now. But what do you get from eBay? Let's take a quick look at fundamentals. So eBay right now, future growth. This is a company that not a heavy grower, right? But what are you getting? You're getting a company that's been profitable for some time, a company that's positive in cash flow from operations. So maybe this is a company to look at if, hey, maybe I feel a little bit too heavy in stocks, in growth stocks. Maybe I want to see something a little bit more in the value play. That's where I would put eBay in. I'm not much into that investment style, so right off the bat, I can tell you I wouldn't mind having eBay. I wouldn't have eBay in my portfolio right now. They do have a dividend of 1.09, so this is again another company that, hey, kind of quiet. It's been profitable. It's been positive in cash flow from operations. Not a fast grower, but what am I getting with it? I'm getting a 1% dividend yield right now. Even though the e-commerce is still right, eBay. I'm guessing they still have a good user base. I purchased some stuff from eBay here and there, but remember that competition. How are they? The thing is, one would have to really look at the market and see this company. How are they innovating? Are they doing methods to make sure that they keep users coming to their platform? Are they doing new methods to get new customers onto their platform? And that's where I would definitely want to do a little more research on eBay. If we take a look at fundamentals at their financial health, even if they are leveraged, before I even take a look at it, even if they are leveraged, I wouldn't really care about it too much because they are profitable and because they are positive in cash flow, right? That's why we have to understand where these companies are at. But right now, what do they have? They have about $3.4 billion in cash and about $6.8 billion in debt. So they are leveraged to some extent, but not something I would really worry about too much because of the rest of the fundamentals. For me, I'm not a huge fan of eBay. Why? That future growth. I'm not a huge fan of 4% growth in future revenue. I'm a little more focused on the bit growth. Again, this doesn't mean this is a bad one. The other red flag I would just put right now is overextension in stock price and a bit overextension in valuation right now. Again, this doesn't mean it will pull back. I just believe there's a higher risk of it happening. Greystone, eBay is a good stock. It's fair valued and pays a dividend. But yes, so right now the stock's 16.78 EV. A good point that I think it was Greystone just made. 16.78 PE ratio is definitely not bad compared to the rest of the market, right? If you look at the rest of the market, I mean, let's take a look at, just for example, Microsoft, right? Microsoft has a forward PE ratio of 32. What's another stall player? Another player we can put here. Maybe Qualcomm. Qualcomm has a PE ratio of about 17.18. So it seems to be, compared to like the FANGs, maybe, or to the bigger players, it might seem a bit undervalued in form of PE ratio. Compared to maybe some other players, it might be more fair valued. But compared to just itself, I was just comparing it to itself, it seems a bit more overvalued there than it normally has been. So Judo, I hope you enjoyed that. And again, these are just my thoughts. I could be completely wrong, but it's just the method I turn to follow to help me invest. Shane, you were surprised this morning that China Tech was flat, but it looked to be picking up steam now. I'm holding around 9K in Techie. Nice, Shane. So Techie is one of my, I don't know. I'm pretty sure it's not. Obviously, the E should be before the C, but I call it Techie. Tencent is one of my favorite plays in China for sure. I have Huya as well. I have JD and Neo, but I do believe Tencent is probably one of my favorites right now. So China exposure has definitely taken a big hit. But we can see, right, Huya is up 2.6%. What else do we have? Tencent is up 1.5%. I do believe Tencent right now is sitting at a very attractive levels. It's definitely not overextended, and it's just been building up volume within those prices. So Tencent is one I'm happy. Maybe I should start looking at this again, maybe for next week. So every Saturday, guys, Saturday or Sunday, I post a video. I'm gonna start posting a video. I did it last week of 4 stocks I'm looking to buy this week, and those 4 stocks are obviously stocks that have been in my portfolio already, or ones I'm looking to add. Have done some fundamental technical analysis in it, and I believe are sitting at great prices for me. So make sure to stay tuned for that. Last week I did one, and it was CrowdStrike, Square, Twilio, and Shopify. Sometimes I might even read through them just because I want to increase my overall exposure. But maybe Tencent might make it this week. Dr. Sim, TME is good too. TME is definitely pretty not impressive, interesting for sure, Dr. Sim, but I just don't know. Something doesn't really pull me into it. I guess maybe just because I'd rather have just exposure in Tencent and other Chinese players instead. So is there any other stock you guys want me to take a look at? So Kai wanted to take a look at HIMS, and Exit actually wanted me to take a look at ENPH. So let's take a look at those two. So Enphase Energy, I think we've recently looked at this one as well. First thing I'm seeing, not overextended right now, right? And this is what I mean. Overextension worked both ways. It kind of was under overextended, if that makes sense. And eventually now it kind of pulled back. Not a guaranteed, right? And I only use these on companies I have done my form of fundamentals on. So let's see. ENPH. Technicals don't look too bad. Let's take a look at fundamentals. Fundamentals right now, Enphase Energy. This is one together with designs, develop, manufacture, sell, and sells home energy solutions for the solar photovoltaic industry in the United States and international. Thanks, Polly. Appreciate the support, man. Or Polly, appreciate the support. It really does mean a lot when you guys just small comments like that really can help me continue to make content. So, and make sure to hit the thumbs up, right? So ENPH, future growth. This is a company that's 21.5% on average for the next 3 to 5 years. So a nice hyper growth stock. They are profitable and they are positive in cash flow from operations. So fundamentally, they are in a great place. Financially, let's take a quick look at their financial health. Financially, they have $1.5 billion in cash and $1 billion in debt. A good balance sheet, especially because they had strong fundamentals. Overall, the stock right now, not overextended either. Let's take a quick look at the stock here. I don't think I looked at it here yesterday, and maybe this is what you wanted to take a look at in Exit. First thing I'm looking, forward PE ratio, a bit overextended from where it's normally been, but it has pulled from way in the past, right? But definitely a nice pull down from where it has been in the past few months. Maybe I want to take a look at EV to EBITDA forward instead of forward PE ratio. Let's see if that gives us a different thing. And no, it pretty much looks pretty similar to the EV, to that ratio we just looked at. Maybe let's take a look at price to sales ratio. Nope. So all metrics kind of look the same. Shane, take care. Have a great day, and may the stonks be with you as well. Now I feel like now I want to go watch some damn Star Wars because of you, Shane. So in form of valuation metrics, they're all kind of screaming the same thing. A bit overvalued from where the stock has been in the past. A bit in the long past. Undervalued from where it's been in the recent past, right? So in the past few months, it's definitely seen a nice pullback. Price to sales ratio of about 10. I believe anything below 10 is when a nice amount of the risk has been eliminated. But again, it depends on the stock. This is also a company that is profitable, a market that's gonna grow dramatically. So I can see exit why investors would be pretty excited on this company for sure. I'm not much in the energy industry, but just based on fundamentals, if I let's say I really like the energy industry and the market that they're in, based on their fundamentals, I wouldn't mind having them at least a small position in my portfolio. Again, it would all depend on how I was on that market. But fundamentals and technicals don't look too scary. So let's see what else we have, guys. And let me just take a quick look. Anything else dramatic? So we have Celsius. Redfin, man. Redfin is taking a beating today. So I guess I have some content for today for sure. We definitely have some players down. Appreciate the lookup, and let's see what else do we have. So we have we have Kai who wants to take a look at HIMS. So HIMS, let's start off like always with a quick look at technicals. So HIMS, first thing you're seeing, right? That overextension you keep seeing, right? Overextended, higher chance of pullback. The only thing is you don't know when that overextension is going to end, and overextension in the downside as well eventually pulls back. And here you saw the stock price is down a nice amount right now. It's down what, 16.8% today? Is that how much is down? let's see. I'm just gonna add maybe create new. Just watching. Hims. Oh no, never mind. This is, I think, from, it's down 5% today. This is my candle. Sorry, that was my candle. I'm pretty sure I can do this. I don't use. Where is my ruler measure? Yeah, so from the candle, right, it's down about 16%. Okay, all right. So that's what I was looking. My bad. So right now the stock has definitely seen quite a pullback. It's down 5.3%. It was a bit overextended. It's now sitting at its moving average. Heads up, loading the boat on SRNG. Keep it on your radar. See you in space. Best of luck, Polly. Hope your investment or play or whatever you're doing goes well. I always wish best for everybody. I think this market, anybody can make money in different methods as long as you understand your investment style. So Hims, first thing I'm seeing, Kai, is not overextended at all. So that looks pretty interesting for sure. If we take a look at fundamentals, let's take a quick. So Hims and Hers Health, they operates as a multi-specialty telehealth platform that connects consumer to licensed healthcare professionals. I mean, I think the best thing is to just go to their websites. I have done a few videos, I think, of Hims and Hers. Not Hims. I just want to look at the overall site. Hims. I want to take a quick look at. Is it this for Hims? So yeah, I mean, you can here purchase stuff for hair losses, skincare, anxiety, depression. This is the healthcare design around you. So definitely take a quick look at their websites to understand what they do, right? But now if we take a look at fundamentals, super small cap, right? $2.6 billion, Kai. We already saw technicals look pretty good. Company expected to grow 22.5% on average for the next 3 to 5 years. So this is a nice hyper growth stock. Unfortunately, the company is not profitable right now. They're not positive in cash flow from operations. Right? So they are something to put in the back of the mind, right? This is something that it seems to be in early stages of business, but high revenue growth in the future. This is a company that I want to have a strong financial health. Financially, they are looking pretty good. What do we have? $323 million in cash. And what was this? So March 30th, and no debt to its name. So fundamentally, they look in a good place. Technically, they don't look half bad. I think it's too early to really look at them here. I think there's not much information on them. I might have been a mistake. So obviously there's not too much information since this is a recent new company, but it's kind of sitting on its, I wouldn't say its average level for sure. This price to sales ratio about 8.9. This is a company that is going to grow at some strong levels. So that value right now is going to contract a nice amount in the future. Me personally, not too bullish. Not that I'm not bullish in this market. I'm just more bullish in other markets. So yeah, those are my overall thoughts. Fundamentally, definitely looks good. Technically, technicals as well don't look half bad. And give me a quick second, guys. I just messed this up. So market is losing momentum. Exit on the lunch break. Hopefully, I need to go on a breakfast break in a bit. But let's see how the overall stocks are doing right now. Let's take a quick look at my portfolio again. So things are less green for sure. I'm seeing more red, and things are looking reddish. Still, the biggest downers are Celsius, down 14%. We have some other players. Redfin has definitely taken a hit. This is one might be looking pretty interesting. Tattoo Chef, some popular names have definitely taken a hit today. So guys, if you have any other questions, feel free to post in the comments. Maybe even outside of stocks, right? Maybe if you guys don't want to take a quick look at stocks, maybe just investment styles, feel free to post on the comments. Like I said, I try to be as transparent as I can to the community. So if you guys have any questions, feel free to post. Even if it's outside of stocks as well. And also, guys, let me know what are some stocks you guys are thinking of buying in the next few days. I love to hear ideas from other investors. Does anybody have any special stock on their mind right now that has seen quite a correction? and are thinking about adding, or what are some of your biggest positions you have right now and are super excited about the growth. I definitely like to hear from other investors. So just let me know in the comments, guys. For me, you guys know my biggest positions are Unity, Sorens, C Limited, and Nvidia. Those are my four tier 1 stocks at the moment. Some notable names would be AMD and Microsoft are big positions in my portfolio as well. So Dr. Sim, you're taking a look at LVS. I'm not gonna do a full look at them. I just want to see Las Vegas Sands. Okay, yes, so the casino place. Nice, Dr. Sims. Definitely not overextended. So that one looks pretty interesting. Again, not my investment style for sure. But doesn't mean it's a bad style. I don't think I have much casino plays. The closest thing would probably be DraftKings. Kai, you look Airbnb. So Airbnb is one I'm looking to as well. I don't have a position in it, but this is one that I don't know. I'm looking to add into my portfolio. Lemonade, I've talked about it a few times. Even though it's definitely an interesting company, right, Kai? I just the insurance company as a whole is not one that really excites me. But this one has definitely seen a nice pullback as well, so I can see why you would like to add into this one. So Lemonade, definitely a nice. Those two, Airbnb for sure. I'm looking to add. And thanks for reminding me on that one. So if no one has any question, guys, I do appreciate the support. Thank you for joining the stream. Like always, I'm gonna be on. The new time is 10 a.m. Eastern time. I see a lot more traction with you guys, and I'm happy to have you guys coming to the stream. So see you guys tomorrow at 10 o'clock Eastern time. Best of luck to everybody. Let's hope we have a good investing day. But remember, I'm more long-term investor. I hope most of you guys are too, where day-to-day action is more just noise. We're looking for long-term returns in the future. So take care, guys. Have a good day, and see you next time.